and minimizing further suffering and casualties among Palestinian civilians.
Blinken says an extension is something the U.S. has been pushing for since it means more hostages will be released, maybe even American hostages. As for the world's other major conflict, the one in Ukraine, President Volodymyr Zelensky is calling for a faster buildup of fortifications to prevent Russia from taking more land. Bloomberg's Alexander Kudryavtsy is following this from our Warsaw Bureau.
Ukrainian troops are more or less stuck on the front line because they face the equally entrenched and thick defense lines on the Russian side.
Bloomberg's Alexander Kudryavtsy. There will be heavy security in place for the Rockefeller Center Christmas tree lighting ceremony tonight. Hundreds are expected to gather around the 12-ton, 80-foot-tall Norway spruce that came from a property just outside of Binghamton, New York. The NYPD is also ready for protests as pro-Palestinian organizers have posted on social media for their supporters to flood the ceremony. Global news 24 hours a day and whenever you want it.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long at Bloomberg. Cigna Group and Humana are both trading lower. Sources tell Bloomberg Cigna and Humana are in talks about a potential cash and stock combination to create another giant of the health insurance industry. Humana shares down now by 5.2%. Cigna shares moving lower by 7.8%. We've got the Dow, the S&P higher. S&P little change right now, but NASDAQ is in the red. A move lower since our last update. The NASDAQ Composite Index down now by 8 points, drop there of 0.1%. Small cap shares, though, continue to outperform. The Russell 2000 up 15 points, up 0.9%. S&P little changed, higher by 2 points, while the Dow Jones Industrial Average up by 70 points, higher by 0.2%. Bottom line here, mixed equity market, 10-year yield 4.28%, with a 2-year that's yielding 4.63%. Gold up $4.50 the ounce to $2,045, up 0.2%. West Texas Intermediate crude up 1.9%, $77.86 a barrel. Well, as for the inflation backdrop and just where the 10-year may be heading, Terry Wiseman is Director of Global Currencies at Macquarie Futures USA.
I think we can see a situation where if disinflation continues slowly, you get the bond yield going down to where it was, let's say, in the spring. 3.5% is not inconceivable without a stock market drop, as long as it happens slowly and steadily.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Foot Locker shares are jumping the most in more than a year after raising its full-year forecast, citing strong results over Thanksgiving week and progress on its strategic growth plan. Foot Locker shares, they are surging right now by 16.7%. Again, recapping, we're looking at a mixed market here. S&P up 2, a gain of 0.1%. NASDAQ down less than 0.1%. The Dow up 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Man, it's not very often I'm in the same room as Charlie Pellet. If you're with us on YouTube, it's not only the patented double point, but I can see it firsthand. It's like a combination of riding the subway and being on the floor of the New York Stock Exchange at the same time. By that, Kaylee, I mean it's a thrill. I'm Joe Matthew in New York at World's headquarters. Jealous. This was your life at one point, Kaylee. And you're, of course, in Washington, D.C. Bill Ackman's making a lot of news today. We talked about last hour's comments about Joe Biden. He's talking about interest rate cuts now. Look, you're either in the Bill Ackman camp or not. He's got feelings about a lot of things, Kaylee.
He does indeed, including seeing a risk of a hard landing for the U.S. economy, which is a little bit more of a hot take when everybody is growing in calls for a soft landing. But he thinks, nope, the landing could be hard, and that means the Fed's going to cut earlier than everyone expects. It's just interesting to contrast that with really strong GDP data we got this morning.
That's true. Maybe he's been reading Bloomberg Economics. They're still calling for a hard landing, aren't they? Let's hear Bill Ackman sat down with Bloomberg a short time ago. Let's listen.
I think they're going to cut rates, and I think they're going to cut rates sooner than people expect, because what's happening is the real rate of interest, ultimately, which is what impacts the economy, keeps increasing as inflation declines, right? So if the Fed keeps rates in the sort of middle fives, and inflation is trending below 3%, or that's a very high real rate of interest.
That was from his interview with David Rubenstein, which will be on peer-to-peer conversations. But we didn't want to sit on that, Kaylee, because it was actually moving markets this morning.
Yeah, absolutely, as was the economic data. When Bill Ackman talks, generally people tend to listen, especially if he's saying something that contradicts maybe what a lot of people are thinking at the moment.
I say the same thing about Michael McKee. Not that we're trying to move the markets here. Michael's with us, of course, a Bloomberg economics editor, who we get to see as well firsthand in New York. It's nice to see you, sir. Hot takes on the president. He says Biden's peaked. They're going to start cutting rates beginning of next year. Should we be listening to billionaires when it comes to politics or monetary policy?
I'm not sure that they have any greater information than the rest of us do in these days of having a Bloomberg and all the data being published. There was an interesting story on The Athletic magazine that the New York Times bought that said billionaires don't know anything about running football teams.
All right, then.
Talking about how they've run several into the ground. So why should they know anything about politics or economics? Obviously, Bill Ackman has a point that if the real rate continues to rise because inflation falls, the Fed may cut rates. What you're really talking about is not when the Fed will cut rates in a sense of that Ackman's talking about. You're talking about when do you think inflation will fall far enough for the Fed to react. Now, he seems to be saying that they will wait too long. And then we go into recession, we have a hard landing, and then they have to cut rates very rapidly. But you could also make the case that they see inflation coming down, real rates are high, and so they start gradually moving rates lower to keep the same amount of restraint on the economy without making it more so.
But Mike, with 5.2% GDP growth and upward revision for the third quarter, what kind of restraint is really on this economy? How should we be reading this data?
Have you done your Christmas shopping yet?
Indeed, I have.
Well, see, there you go. It's all of you who shopped early.
I knew she was going to say that.
The third quarter, yeah, she's like that. The third quarter, it's third quarter data, and that was then, this is now. The latest data suggests that we're seeing a slowdown in consumer spending. Actually, in this GDP report, consumer spending was revised lower, down to 3.4%, which is still very strong, but it was revised down a little bit. And if that continues, then we will see more of a slowdown in the overall economy. Tomorrow we get data on that. We get the spending numbers for the month of November or October rather. So we will see Kaylee's Christmas buying probably reflected in that.
Thank you, Kaylee.
And then we'll see
You're welcome.
What the holiday spendings bring us.
You know, Bloomberg Economics has been talking about a hard landing for a long time and maybe even considered an outlier by some. When you walk through the scenario that he just outlined, would BE's forecast change if the Fed front-loaded rate cuts next year?
They probably would, because the Fed could stimulate growth in some areas fairly rapidly. We know the housing market is frozen because nobody wants to trade in their 3%, 4% mortgage for an 8% mortgage. But if it gets down to 5%, people have, at this point, there's a built-up desire to move by a lot of people, or people who have jobs.
Is that the breaking point? Is 5% the magic number?
I'm picking a number out of the air there, but some Fed officials have suggested that could be. Nobody really knows. It's psychology. But if they did that, then you would see maybe real estate start to open up, and then you get all the follow-on stuff of buying furniture and carpeting and drapes and things like that. So you could see interest rate reactions. I would suspect that the car companies would rush out with some deals in terms of interest rates, and so you could see the economy pick up back again if the Fed did that. They're not going to want to do it though until they see inflation coming down.
I think it sounded coarse when we were talking about Kaylee starting Christmas shopping early. When you say she's like that, what you mean is she's very responsible
and organized,
and organized,
and all
and
the
is
things I am not.
Kind of a rule follower, and you know we're very lame compared to that. I think.
That's.
You understand that? I hope Kaylee, you do.
Okay. Yes. Thankful for that clarification because I was thinking Michael McKee was accusing me of being a shopaholic.
Oh
no.
I don't think he was going there. I'm sure he wasn't going there, Kaylee. Michael, you weren't going there.
I wasn't going there. No, she did send me a list of all the packages she's gotten lately.
Really?
A lot of deliveries.
15 in the last 2 days, I think.
Okay, so this is exactly what we thought.
Quite a problem.
But I mean, you're not. There's nothing wrong. You are a role model for the rest of us. We should all have a Christmas shopping.
I feel like we should do this once a week, actually, Kaylee.
Well, she could be our gift shopper. She could
100%. We're going to need your Christmas list now as well, Kaylee. We'll be expecting send us your list, please, and what you want for Christmas this year. I'll meet you
right,
Christmas
will do.
Eve, Michael, and we'll run down
That's
that
what we'll
list.
do.
Okay.
We'll see what stores open.
This is how it goes when you're the economics editor at Bloomberg. You wait till the last minute. Michael McKee, thank you. Kaylee in D.C. I'm Joe Matthew in New York. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. KKR is paying about $2.7 billion in cash to acquire the remaining 37% of Global Atlantic that it doesn't already own. And with more on the story, here's Bloomberg's Denise Pellegrini.
Charlie, through this move, KKR is broadening its bet on insurance to fuel asset and fee growth. The buyout giant says it will fund the purchase from its balance sheet, which had $23 billion in cash and investments as of September 30th. KKR says the transaction, along with a series of strategic initiatives, is expected to boost after-tax distributable earnings per share by about 10% next year. KKR also says the acquisition will give it access to Global Atlantic's retail distribution platform, which benefits its growing wealth business, and it creates opportunities for the firm's capital markets unit as well. Charlie.
And that's Denise Pellegrini. KKR up 8.1%. GM boosting its dividend by 33% and repurchasing $10 billion of shares. And in a wide-ranging interview on Bloomberg this morning, GM CEO Mary Barra discussed the cost of that recent labor agreement with the United Auto Workers Union.
One of the things our manufacturing team members very much value is job security. And to have job security, you have to have a strong company and you have to look at all of your stakeholders. So what we did from a share buyback perspective for our owners is, I think, a very balanced response.
And GM shares up now by 9.3%. By the way, you can hear more of that conversation on the Surveillance podcast, and you can download it wherever you get your podcasts. Those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
We're live from Washington and New York today. Before we go any further and some final thoughts with Kaylee in D.C., let's bring you up to date. World and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Hi, Joe. Well, as the truce between Israel and Hamas enters its final hours, negotiators from Qatar, Egypt, and the U.S. are pressing for an extension to try to secure the release of additional captives. Israel has vowed to resume its attack on Gaza once the truce is over. U.S. Secretary of State Antony Blinken is traveling to Israel and will arrive tomorrow to further discuss the war and to visit the families of the Americans still being held by Hamas. Today, 12 hostages were released by Hamas. Israel plans to release about 30 Palestinian prisoners. Saudi Arabia is getting more involved in diplomatic efforts around the Israel-Hamas war. Bloomberg's Sam Dagger reports the kingdom has offered to invest more in Iran, its traditional adversary, if it keeps its proxies out of the fight.
What the Saudis are offering the Iranians is greater economic and political and diplomatic cooperation in return for Tehran putting pressure on the various armed groups that it supports across the region, not to provoke a wider conflict with Israel.
Bloomberg's Sam Dagger reporting from Dubai. He says it's not clear how seriously Iran is taking the offer, but it did praise the October 7th Hamas attack. House Speaker Mike Johnson is expressing real reservations about expelling New York Republican George Santos over ethics concerns. But he says lawmakers should vote their conscience when the vote is taken, possibly as early as tomorrow. Today on Bloomberg Sound On, New York Republican Congresswoman Nicole Malliotakis was asked if her colleagues will decide to expel.
Well, I think the majority of Republicans will, and I think it will be a bipartisan vote, and we need 2/3 of the body to vote to expel for it to be successful. I will be voting to expel Mr. Santos.
Congresswoman Nicole Malliotakis speaking with Bloomberg's Joe Matthew. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Joe and Kaylee.
All right, Nancy, thank you. Unclear exactly what we're going to learn here over the next 24 hours, but Kaylee, we know it's going to be interesting. With not only the potential for an extension here in Israel, we're going to have more on that coming up, I suspect, on Bloomberg Business Week, if and when this happens, and people are feeling pretty optimistic about it, but of course, as well, what could be the end of the line for George Santos. Nancy was just talking about that. An expulsion vote could come at any time, Kaylee.
Yeah, it could, although there is technically a clock on it. They have to act by Thursday. The question, Joe, is do they act to actually take the yay or nay vote to expel him, or are they going to try to table it, maybe do some kind of fancy maneuver to punt this and drag this saga on another day?
Yeah, they could kick this into Friday just to keep things interesting, of course. None of this compares to the news that was on the front page of the Journal this morning. Kaylee, a family of 6 gaseous worlds circling like rhythmic dervishes around a sun-like star. They've found a new system, a new 6-planet star system 100 light years from Earth. Does anything else really matter?
100 light years, Joe? Do you have any idea how far away that is? It is approximately 600 trillion miles.
Did you do the math on this?
Space is terrifying. I did. I absolutely did. I find outer space just, A, mind-blowing. B, does it really go on forever? C, I'm scared. So, there you go.
I will think of you and the movie Gravity as I leave the studio here, just tumbling effortlessly into space. We can't get there, by the way, so I wouldn't worry about this too much. We can't even figure out how to get back to the moon right now. We're working on that as we speak, even though we've
But Joe, could they get here?
You're asking the right questions, Kaylee Lyons. Maybe this is what's going to come up in George Santos' news conference at 8 o'clock tomorrow morning, because nobody knows why he called it, what he's going to do. He says he will not resign, and I figure he could get pretty abstract at this moment when he literally has nothing to lose.
Yeah, fair enough. Maybe he wants to talk about some planets.
That's right. Exoplanets.
And be out of this world.
Kaylee, I'll meet you a little bit later. I know you're lonely down there. I'm with all of our friends up here in New York, but I'll meet you on Balance of Power. at 5 o'clock on Bloomberg
right.
TV. We're going to figure out and solve
Sounds good.
all of the world's problems then. For Kaylee in D.C., I'm Joe Matthew in New York. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Sweet spot, Goldilocks scenario. Could it be? Could it be?
It could be. Is it? I don't know.
The economic data today certainly maybe pointed to some of that, even though GDP revised upward for the third quarter. Consumer spending advancing at a less robust rate. And then you had also consumption expenditures price index. That was revised lower. That's the Fed's preferred measure of inflation. So hello, everybody. Welcome to the Goldilocks economy.
The Fed Beige Book just in the last hour telling us that economic activity here in the U.S. has slowed. Consumers have pulled back on that discretionary spending. Couches, appliances. We're not buying them like we were a couple of years ago.
Although, as we reported just in the last week or so, yep, inflation's way down from where it was a year ago, but folks, you're still paying more for stuff than you were pre-pandemic. All right, welcome everybody. It is Wednesday, November 29th, live in our Bloomberg Interactive Broker Studio. We are on YouTube and, of course, on Bloomberg Originals. And so it goes, the rally that's driving global bonds to their best month since 2008. Here in the U.S., a lot of it has to do on bets of a Fed pivot early next year. We're going to talk about that a lot today.
How early? That's the question. Well, Pershing Square founder Bill Ackman is betting on that Fed pivot too, and perhaps sooner rather than later. He's saying in the first quarter of next year.
Exactly. This is among our most read on the Bloomberg today. Hey, and also, nothing like billions in buybacks to get investors' motor going. That's exactly what General Motors did. We're going to hear from CEO Mary Barra. And it makes me wonder, is it really good news? Should we be worried about the EV space, the money that they're putting into it? She seems pretty confident.
How's your confidence in the IPO market?
Not so great.
Okay, we'll see. Birkenstock today trading
Stuff
above
is
its
happening,
IPO price
yeah.
for the first time, actually.
That's true.
Okay.
All right.
Well, speaking of IPOs, Reddit is leading the class of 2024 IPO candidates. We're going to get in a health check of the IPO market for 24.
And a great guest that you are bringing us, Chime's founder and CEO. It's a fintech. We're really curious about what he and his team are seeing when it comes to the consumer, the banking environment, and what it's like operating in a higher rate environment.
Yeah, that company worth $25 billion back in 2021. Also, this week's cover story on the deepfake pornography victims that learn there are not laws out there to actually fight it, Carol.
It's going to freak you out, everybody. You're going to run for cover on this one. Also, we're going to check in with the founder of Par Avion about the private jet market. Travel business definitely has come roaring back, but not
I've
maybe...
been flying my private jet everywhere. Have you?
Have you?
Yeah.
How come you never invite me on?
It's invisible.
And then we've also got the head elf on. We're going to talk about the Santa business. Right now, though, we're talking about the business of the markets. Countdown to the close starts now.
Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostic alongside Katie Greifeld. We're joined right now by our colleagues Carol Masser and Tim Senovic. Wow. Welcome to our audiences across all of our Bloomberg platforms, television, radio, originals.
Right. Wow.
Absolutely.
Wow.
We're here.
Absolutely. It's always wild talking to you two, particularly on a day like today where we got a lot of news flow out there. I mean, you can kind of pick your poison, whether you want to talk about deals, whether you want to talk about the global bond rally, or, of course, you talk about Bill Ackman, who is now talking again. And he has some interesting thoughts about when the Fed might actually start to pivot.
Yeah, well, the Fed president's kind of battled it out about what's going to happen next because it doesn't seem like there's one narrative. The narrative from Bill Ackman, of course, big hedge fund guy, Pershing Square Capital, he is basically saying that, yeah, I think that the Fed is going to actually cut rates sooner rather than later. And he's talking maybe as early as the first quarter. And what's interesting is he talks about the real rate of interest, which is what impacts the economy. He says it keeps increasing as inflation declines, which means more of an impact on the economy. I think that's where he's thinking.
It's certainly a bet that he's making, but the question is, does that bet actually actually become true, Katie. We talked to Bill Smead over at Smead Capital yesterday, and he had certainly a different take on the economy. He's very concerned that inflation is a lot stickier.
He's negative,
He's
man.
very negative. He's very concerned. He thinks we're in a commodity super cycle like we were in the 70s, like we were in the 80s, and that inflation is here to stay. So he doesn't see the Fed actually cutting rates anytime soon.
I want to talk more about Bill Ackman, though. So he says that's the current macro bet we have on, basically that the Fed is going to cut in the first quarter. I want to know how he's expressing that. We know that he was short the long end 30-year treasuries earlier in the summer. That paid off. Where is he expressing that? I would assume it's in the front end, but would love to get some details.
Yeah, details, right, Bill?
Yeah,
You don't know the
I don't
trade.
know. I think you'll get those details after he's closed out the trade.
Yes.
But we should point out too. I mean, because I was looking at when you look at swaps pricing, when you look at SOFR pricing, when you look at everything here, most of those rate cuts are really being priced a little bit later into the year, so like May and June. So the idea that he's betting on a Q1 rate cut is, to a certain extent, a bit of an outlier. So it'll be interesting to see how long he stands by that trade.
Yeah, we should point out more of that conversation in the upcoming episode of the David Rubenstein Show on Bloomberg.
Peer-to-peer.
But what's it? What?
It's called peer-to-peer,
Peer-to-peer.
right?
Yeah, I call it the David Rubenstein Show.
Yeah, because that's
They're
like his peer. You get it?
You know, gosh, thanks for the mansplaining. I really so appreciate it.
It's called romainsplaining, okay?
Take it away, whoever wants it.
Do you guys want to talk about the economy?
Yeah,
Can I explain that to you too?
Well, let me tell you about GDP. Third quarter GDP. We also have the numbers
Women's I'm up for.
this morning, a 5.2% annualized pace. You remember the initial number, 4.9%. That was already pretty surprising. Now the final number that we have, that 5.2% pace, we haven't seen that in about 2 years. And you can see on the chart, sorry to our radio audience there, but the chart really tells the story. That is quite an acceleration.
Anomaly?
Yeah, maybe.
Does it mean anything about what's to come?
I don't know. Why is this an anomaly? I mean, first of all, I went back because I was looking at some of the predictions at the end of last year for what we would see in GDP growth this year. Nevertheless, pretty much everyone got it wrong. No one even came really close to 5.2%. But when you look at what's driving that,
Everybody thought we were going to have a recession.
right? But there are real fundamentals driving that. Now, whether that's going to last deeper into 2024, that's a whole nother conversation. But I mean, look, we're 3 quarters in, and I don't think the fourth quarter is going to shake out to be that much different than what we've seen already.
Well, we did hear from the Fed just in the last hour. The Beige Book came out that said, economic activity here in the U.S. has slowed. Consumers have pulled back on that discretionary spending. We're starting to get some numbers in from, the holiday shopping weekend, and it's looking really, really good. It's looking like that discretionary spending is up.
But my rebuttal to that is it very specifically said they were pulling back on discretionary goods spending.
Right.
And
so
that the services
furniture,
was holding up,
appliances.
or particularly travel and leisure was holding up.
Yeah. It makes sense. We bought enough couches in the last couple of years to last us a few years.
I do wonder when the cumulative effect of these higher rates.
I always wanted where you have the 2 couches facing each other in the living room. But my wife
Don't talk
refuses
to your
do
wife.
that. She thinks it's just
Does she
going to
let you
clutter up
interrupt like
the
this? Because if
living
so,
room.
we're going to have a
Her?
conversation.
Oh, she doesn't listen to me. She just walks out of the room.
we can do that?
I don't know if you guys saw this story from the OECD, whether or not you respect their projections or not, but they did talk about the world's advanced economies heading into a deepening slowdown, and talking specifically about these markedly higher interest rates taking kind of a toll on activity. And I think it gets accumulative over time. So this higher for longer, you do wonder about the deepening impact it might have going forward.
Lots to chew on.
That's
that's it, Carol.
That's women's planning.
You like those long pauses. Dramatic effect.
Works really well on radio and television.
Yeah, I mean for television, at least you see us. But if you're on radio,
you are
you're like,
welcome, everybody.
Did the antenna just go out? What's that? How do you get radio?
Honey, could you turn up the volume?
I don't know.
All right, guys, we're going to be back in less than an
They should put this on YouTube.
time. Radio, TV, YouTube, and Bloomberg Originals. We'll be back at 4 p.m. Wall Street time. Beyond the Bell Metaverse. It's coming. All right, I'm so glad we have Michael McKee, because he's going to be like, hey, kids, I'm going to really tell you what's going on here.
I know, I was just dying to bring him into the conversation just now. So we're talking about PCE, we're talking about GDP, and Mike's just sitting there
And I never
shaking his
interrupt
head.
Carol. I learned that years ago.
No, but
a
I do.
smart man in our midst.
You are our guru when it comes to all things the global economy and policy that
It's
might
almost like
impact
he's
growth.
international economics and policy correspondent.
Hey, somebody give him a title, will you? First of all, and I caught the tail end. I think you were talking with Joe Matthew. When Bill Ackman comes out with his thought, how do you think about these various individuals, whether it's a Jamie Dimon and Bill Ackman, weigh in on the economy? Do you think it's of note?
It depends. thing about the Ackman interview yesterday is he sort of laid out his argument. And so you listen to the argument and you decide if that makes any sense or not. Jamie Dimon was basically saying the same thing that he had said before as well. He didn't go into as much detail in the way he sees the economy unfolding, but they're both suggesting the Fed is going to go too far. Now, the question is not so much when does the Fed raise interest rates or do they raise interest rates too much, it's when inflation comes down. If inflation comes down rapidly, then that's going to push real rates up, and that's going to put more pressure on the economy, more tightness on the economy, and so the Fed would be lowering rates. If you think that's going to happen in the first quarter, then Bill Ackman could very well be right.
Right.
Are we going to have a recession in the first quarter? Probably not. Not the way it looks right now. Now, things could change, but the way the economy is unfolding, and even the markets aren't with Ackman on this one. They're thinking May would be the first time that we would see a rate cut.
Do we have to have a recession for inflation to finally land back to that 2%?
There's a bit of an argument over that. The feeling was always in the past that you did.
Mm-hmm.
Now people are beginning to say, well, this looks like we could avoid it, that we could have the soft landing. Don't want to say that too loud.
We're saying that again?
Because we're seeing the economy slow down. And you were talking about, with the TV folks, the OECD today. They're just telling us what we already know. Central banks have raised rates and economies are slowing down. That's what's supposed to happen. The question is, does it go too far? And we don't know yet. But it looks good right now.
Are there any data points out there, Mike, that could bolster the argument that the Fed is going too far? Because from what you've explained, from what we've seen today, what's happening right now kind of seems like best case scenario for Jay Powell and co.
Well, that's what it looks like. The issue is you don't really know until you know. You can't know exactly what's going to be happening going forward, and we're always looking at backward-looking data. But if consumers pull back in the fourth quarter, if your daughter doesn't get the expensive gift I'm sure she's asked for, then we're going to have more of a likelihood of a harder landing, or if companies start letting people go.
What is this gift?
It's like anything kids want.
International Taylor Swift tickets.
Yeah, it's being overseas for a year. You're welcome, honey. No, but what's interesting is it's not an exact science, Mike. And is it more likely the Fed goes too far or does too little? I feel like Jay Powell would rather go too far. But I don't know. You're the expert on this.
I think you're right about that, but it's a close enough call right now that pretty much everybody has signed up, even Loretta Mester today, to the idea that we don't move in December and we wait and see what happens.
But it's a big gap. Like I was reading something about historically, when you have such a large gap, it's unlikely that the Fed raises rates again.
That
a gap in a period of
true.
time you're talking about?
Yeah.
Okay.
That is true, and it's also true that the Fed has in the past pretty much always gone too far. And so the hope for Jay Powell is that he's learned a lesson and can calibrate this, but it is obviously really hard to calibrate. You have one tool, the interest rate, and you have this insanely complicated economy, and it's really hard to know exactly what's going to happen, which is why it's been difficult for them, because it's not even behaving the way it's behaved in the past.
Yeah.
So next week, Friday, we're expecting, according to economists surveyed by Bloomberg, I can't believe we're already talking about the change in non-farm payrolls. I mean, that is the number to watch, though. 175,000, Mike, is what economists surveyed by Bloomberg are anticipating right now. So it's still jobs being added to the economy, albeit at a slower pace. What happens if that number is just a blowout number?
Then we have markets react with higher interest rates very quickly. Whether the Fed does or not will probably depend on the composition of it and why we saw that. It's also hard to tell. At this time of year, we get into seasonal adjustment issues because companies start hiring holiday seasonal workers, and there have been fewer of them hired, from what I understand.
We've heard that as well, Mike.
Somebody said they were down 40% seasonal hiring. Yeah.
Well, it's also true that we're seeing a different kind of hiring too. I mean, it used to be we'd add a lot of retailers, and now then we added a lot of couriers and warehouse people.
Yeah.
And so it's kind of hard to know exactly, because Amazon, for example, has its own subcontracted delivery people. And so, do we notice when they get more people? It's really hard to tell. So we'll have to look at the numbers with a microscope to see how it happens. But also, take a look at the unemployment rate. That's what the Fed would be really watching, see if it jumps.
By the way, the person last week who told us it was down by 40%, Mary Lou Gardner, associate partner at Infosys Consulting.
Correct. That's right.
Thanks to Ariel Agami for that assist. And Paul Brennan.
Keeping our brains pure over here. What is it that you watch most closely, like from day to day? What is it that, in terms of maybe looking for clues, trends? Because so much is backward looking, right? So what is it that you, I don't know, look at?
Well, it shifts, but I think the thing that we look at constantly is prices and what's happening with inflation, because that's really what's driving the Fed. I don't look at the markets and their forecasts for Fed activity every day, because those change in a
Moves around a bit.
As soon as a Fed speaker comes out, that changes. But I do look at also, obviously, we look at the numbers that go into employment estimates. Tomorrow we have jobless claims. We'll take a look at that. But you kind of just want to get a whole feel for the economy. I'm beginning to sound like Jay Powell. The totality of the data, because it is backward looking, so you try to guess what's going to happen by the totality of the data and what it's suggesting about everything. And then you keep your fingers crossed that you don't have any black swans.
Fed Chair Michael McKee.
But it is pretty remarkable if you think about where inflation was a year ago, right? And where we are today. Although we've talked about that we are still paying more for stuff than we were pre-pandemic.
I think what you're highlighting is a misconception that consumers have about how inflation works.
I agree.
And I think this is political, Mike, and weigh in on this, because I think consumers understand inflation to be what you see at the gas station, which is, okay, well, gas prices will come down to what they were many years ago. That's not how it works when inflation slows. Prices don't actually come down. What they do is the rate of change higher slows.
Gas prices actually do come
That's
down
what I mean.
because
Gas
they're
prices,
very volatile.
But I blame gas
and they're a
prices
commodity,
to lead to the misconception that people have about inflation.
Well, it's more like when you go to the grocery store and you say, I paid X amount for hamburger, and now I'm paying X plus
$7 for 6 ounces of pecans.
Oh, that's right. It's baking season.
I've heard about these cookies for 3 years. Okay? I've never seen it.
They will come at some point.
But people don't see those prices going down. They're not seeing house prices going down, things like that. So they think inflation is still high.
But they're not going to come down, right?
They're, in general, they're not going to come
I mean,
down.
you
don't want that.
When my grandma went to the grocery store 60 years ago, things were a lot less expensive.
But Bill Smead talked about this whole idea of, right, that there's not going to still be enough people, right, to fill jobs going forward. There are people not coming in. He talked about housing still being tight. Like these just macro elements of our society that aren't going to change, Mike, that are going to keep prices elevated.
Yeah, we have a decline in the number of available workers. And so we'll see prices rise unless we get a big jump in productivity, because you won't have as many people out there to do the job, and we'll have to raise pay to get people to come to work. And commodity prices fluctuate a lot, but you notice we're not going back down to 69 cents a gallon for gasoline.
Right.
We're still in the $3 range. So people, at some point, they will get over it. They'll say prices will stop going up so much that they're constantly reminded of it. And that's what certain people who live in Washington, D.C. are hoping.
Long live the guru of economy, Michael McKee. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. Lower a little change right now on the S&P 500 index, turning negative, down now by 2 points. We have got the Dow holding on to a 37-point gain. The Dow Jones Industrial Average up now by 0.1%. NASDAQ Composite Index in the red. It is down 15, drop there of 0.1%. But perhaps the key takeaway, 38 minutes to go ahead of the closing bell. The S&P little change, down by 1 point. We've got the Russell 2000, though, surging 0.8%, an up day across the board there for small cap shares. 10-year yield, 4.26% right now on the 10-year, with a 2-year that's yielding 4.64%. Gold up $3.50 the ounce to $20.44, up 0.2%. West Texas Intermediate crude up 2%, now $77.97 a barrel. Sources tell Bloomberg, Cigna Group, and Humana are in talks about a potential cash and stock combination to create another giant in the health insurance industry. A combination could create a powerful challenge to rivals United Health and CVS Health. Cigna shares, they're down 7.7%. Humana down now by 5.1%. As the pace of inflation continues to come down, there are questions about the ability of companies to raise prices. Sarah Hunt is Chief Market Strategist at Alpine Woods Capital Investments.
I think some of the technology stocks continue to have pricing power. I think even some of the consumer things continue to have pricing power. If you look at what people have done on the streaming side with people raising, there's Netflix raising their prices and saying, we're kicking everybody off of your subscriptions. So I think that there are places where people are willing to say, you know what, it's a small enough price per month, I want to keep doing that. Larger ticket items, I think it's much more difficult.
And you can hear more of the conversation with Sarah Hunt on the Surveillance podcast. You can download it wherever you get your podcasts. This update brought to you by Glenmead. Glenmead offers sophisticated wealth and investment management solutions combined with a personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glenmead.com to learn more. Again, recapping here, S&P down 2, little changed. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, so appreciate it. Thank you so much, Charlie Pellet. Well, talking about kicking into high gear, the stock, the buyback plan. News early this morning from General Motors announcing its biggest ever stock buyback plan, $10 billion in total. It also boosted its dividend 33%, Tim, and reinstated earnings guidance after accounting for costs of its new labor contract.
CEO Mary Barra promised better days are ahead, stressing confidence in the cash generation of GM, the execution of strategy, and expectation of growth and strong margins. This, Carol, despite minimal EV sales, a troubled robotaxi business, and even more trouble at its battery pack facilities that has kept EV production in the low thousands.
That's right. GM's Ultium battery pack was supposed to enable the company to make multiple types of electric cars off the same platform and beat competitors to market with a ton of vehicles. Here's more from Mary Barra.
From an EV perspective, we have confidence in the portfolio we have. We're a bit disappointed this year that we were constrained by the automation to build modules. So this is not something that is fundamentally an issue with Ultium. It was more a manufacturing automation issue that we're working, and we'll be out of it by middle of next year and making improvement every quarter.
All right, that, of course, was the CEO of General Motors, Mary Barra, talking earlier today on Bloomberg. Let's get a little bit more into this story. Bloomberg News auto reporter Keith Naughton is on Zoom from Detroit. We love our auto team. They know this world so well. Keith, good to have you here with Tim and myself. How do you make sense of the news today? I mean, the stock's up, shares of General Motors up 9%. Doing a massive buyback and boosting your dividend, I get it why investors like it, but what does it say about the business if this is the best use of money?
Yeah, I mean, it's really Mary Barra kind of pleading for patience in a very expensive fashion, of course, because things have not been going so well on their technology bets. As you noted, the EV ramp has been very slow because of problems building batteries. And, Cruise, their autonomous vehicle unit, has been a bit of a dumpster fire lately with all sorts of safety problems and the CEO quitting abruptly. a week ago. So, and they're scaling back because they're losing, $700 million a quarter at Cruise. So they really aren't getting the payoff yet on these very large technology investments. As a result, their stock's been down by double digits this year. So this is a way to ask investors to give them time.
Okay, so how much time do they need, and what do they need that time for? Because Ford is running into similar issues when it comes to EVs. The F-150 Lightning isn't selling like it was in previous quarters. The Mach-E electric Mustang, same thing. There's this sort of shift in the way that consumers are thinking about EVs. What's going on?
Yeah, there's a few things at work. One, on the production side, the legacy automakers are discovering what Elon Musk discovered a few years ago when he tried to go to mass production with Tesla. You might recall him describing that as production hell. Well, that's what the legacy automakers are in right now. They're discovering that building electric vehicles is harder than building internal combustion engine vehicles. And so there are a lot of hiccups in both battery production and the EV production itself. That's one problem. So they can't get them out the door of the factory. The other problem is this demand issue you're talking about. There's still, rising demand for electric vehicles, but it has slowed considerably because we've gotten past the sort of early adopters who are willing to pay anything to have the latest and the greatest. And now we've gotten to that broad middle of the market, and folks are balking at the price of electric vehicles, which are higher than standard cars, and the charging infrastructure, which is still very spotty in America.
Hey, Keith, our Bloomberg Intelligence team says the move to offset the effects of higher costs from the new UAW contract adds confusion to GM's electrification strategy and is out of step with the practice of conserving cash when demand is uncertain. Should they be conserving cash right now?
Yeah, well, the electric vehicle business at GM and the other legacy automakers is just burning cash right now. So if you take $10 billion and divert it into a stock buyback, yeah, that's money that could have been spent to try and right your EV business or your autonomous vehicle business, either of those. They both consume billions of dollars. So it is a good question to ask. Is this the best use of capital at this time?
So what are investors saying could be better uses of capital?
Well, you can try and, buttress your EV production and strategy and model offerings so you can become a legitimate competitor to Tesla, which still controls more than half the market and makes money selling electric vehicles.
Keith, I just want to, I want to sort of cut you off with another one of my own questions here, so apologies. But there was an article over the weekend, I believe, in the Wall Street Journal about hybrids and the way that some companies now are sort of, they said, EVs aren't necessarily the way that we think the future is going to work. We think it's going to be hybrids. Where are Ford and GM on that?
Ford predicts that its hybrid sales will quadruple over the next 4 years, and they are pouring money into hybrids now because they recognize hybrids are more cost effective and they don't have the charging infrastructure issues. So they can be this sort of bridge to electrification. So there's this renewed focus on hybrids out of Detroit and with a lot of legacy automakers. Toyota never went away from hybrids. They said the market wasn't ready for full EVs. Hybrids is the first step you take on the electrification journey.
Well, you did that great story for Business Week that talked specifically about hybrids, and I thought it was really smart.
I read it in Business Week before I read it in the Journal, Keith. I promise, okay? I promise.
Everybody follows what our auto team does. I'm just going to say that. No, but it was so smart because, it used to be hybrids and then EVs took over, but it was fascinating to hear the reporting that you did about what we are seeing when it comes to the hybrid market and the growth that we're seeing. And you do wonder, does that continue? It was, I think, early October that you did that story. Do we continue to see demand in the hybrid space?
Thanks, Carol, for reading. And so you might recall from that story, one of the people I interviewed was this dentist who has a mobile dental practice. She tows a trailer around. Well, you just can't do that with an electric pickup truck because it'll deplete the battery too fast. But guess what? You can do it with a hybrid, which is what she has, because having the electric motor and the internal combustion engine actually gives you more torque, the thing you need to pull a trailer. So there are many benefits to hybrids that people are really kind of rediscovering or discovering for the first time. And so, and it does lower your carbon footprint. So it's a way to stay and start moving in that direction without any of the, things you sort of have to give up to do EVs.
Amber Lombardi, that's who you did.
So,
what?
Go ahead, Carol.
Well, so do we need to be worried about General Motor and their strategy?
No, I just think it's going to take longer to get there. And that's the issue. And there was, we're sort of entering this trough of disillusionment on the way the EV ramp is going to happen. It's not linear. There's ups and downs, and we're in a down.
And do hybrids provide that bridge, or do they displace EVs?
I think the way the industry views it, and particularly Toyota, the hybrid leader, is that it is the bridge. You take that step into electrification and you live with that in a way that there's fewer compromises. And hopefully during that period, by the time you're ready for your next car, the price of EVs have come down and there'll be more charging stations throughout the country, so you don't have to worry about running out of juice and having nowhere to plug in.
I might have to have you talk to my husband because he's waiting for hydrogen cells, fuel cells.
How long is he going to be waiting,
I don't
Carol?
know, but he's like, that's the answer. I don't know.
That might be the question.
Keith Naughton, you are amazing. Thank you so much, and highly recommend. I'll put that story out that Keith wrote back in October about the hybrid market, because it says so much about what's going on right now.
You send it to me, too.
I will. Well,
Okay,
maybe.
thanks.
Maybe.
Appreciate it.
If you could read a couple stories, you would have. No,
Okay,
just kidding. Just kidding. Bloomberg's Keith Naughton, of course. He's Bloomberg News auto reporter, joining us on Zoom from Detroit.
Hey, let's get a check on the latest world and national news. We got Nancy Lyons in the Bloomberg 99 Wind Newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. The Israeli military says 12 hostages have been freed today by Hamas, with 30 Palestinian prisoners to be released in return. Meanwhile, negotiators, including from Qatar and the U.S., are pressing to maintain the truce agreement for Gaza that's due to end in just a couple of hours. U.S. Secretary of State Antony Blinken says another extension is needed.
Its continuation, by definition, means that more hostages would be coming home, more assistance would be getting in. So clearly, that's something we want, and I believe it's also something that Israel wants.
Blinken will be traveling to Israel tomorrow, his third trip there since the war began. President Biden is in Colorado this afternoon, where he'll be touting his investments into clean energy, specifically wind energy. He's touring CS Wind, the largest wind tower manufacturing plant in the world. The company says it's been able to expand its facility and add jobs due to Biden's Inflation Reduction Act. Well, there's a bump in the road for the push to adopt electric vehicles. Consumer Reports says EVs are proving to be far less reliable on average than gas-powered cars, trucks, and SUVs. We get more from Bloomberg's Karen Moscow.
Consumer Reports' latest survey found EVs from the 2021 through 2023 model years encountered nearly 80% more problems than vehicles propelled by internal combustion engines. EV owners most frequently reported troubles with battery and charging systems, as well as flaws in how the vehicle's body panels and interior parts fit together. Consumer Reports noted that EV manufacturers are still learning to construct completely new power systems and suggested overall reliability of electric vehicles should improve in the future. Karen Moscow, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. The Dow, the S&P, NASDAQ now all in the red. Equities giving up earlier gains. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading well off of session highs, with the Dow now down 7 points. S&P's drop 8 and NASDAQ declines by 31. The U.S. 10-year yield at 4.27%. Gold is up 4. Oil trading in the green, and Bitcoin is lower by 0.3%. Among the main 11 S&P sectors, leaders were real estate and the financials. Telecom was under pressure, and leaders to the upside in the Dow, Salesforce and Intel, while Chevron and Microsoft led to the downside. After earnings, CrowdStrike jumped 10%, Workday rose 13%, and in deal news, the Wall Street Journal reported that Cigna and Humana are in talks to combine in a cash and stock deal. In other news, Fed's bargain says won't take another hike off the table, and GM rose as much as 12%. That's the most since 2020. The company is buying back $10 billion in stock. Wrapping things up, Salesforce and Snowflake report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, getting ready to wrap up the Wednesday trade. Just about 17 and a half minutes left in today's trading session. We have got, when I look at the S&P 500, kind of half of the major industry groups are higher, half are lower. But it really is, once again, about what's going on in the Treasury trade, because we are down again. I'm looking at a 10-year, 4.26. Who'd have thunk?
I mean, we were talking a 10-year at 5% just a few weeks ago.
6% people were talking about, for even the curve.
Ooh, we should have Katie Kaminsky back on and see if she's still sticking to that.
We should bring her back. That's a really great idea. All right, let's see what our Drive to the Close guest has to say about all of it. Amy Magnota, she's co-CIO at the independent investment advisory firm Athagenos Capital. She is on Zoom from Pennsylvania. Amy, good to have you here with us. This yield trade, let's go there. Would you go as far to say we are at peak yield on the U.S. Treasury yield curve? And, and does it mean that ultimately we get to some kind of recession? Does the economy slow down that much?
Our view is that we're expecting the economy is growing pretty solidly. So we had the GDP revision come in today, up to 5.2% real GDP growth in the third quarter, and we're running about 2% for the fourth quarter. So that's pretty solid, especially given what the Fed has done to try to bring down inflation. So our view is more in mid-2024 that we might hit some sort of soft patch or mild recession, with just given the lag effects of these interest rate hikes on what that means for the consumer. And then we also have an unemployment, and then we have stimulus that's kind of run out.
Amy Magnota, what is the evidence that you see today, end of November, almost the end of a pretty incredible rally in bonds and stocks so far for the month of November? What's the evidence that you see out there right now to lead to your conclusion that we'll see some softness in the second half of next year?
I think there's some weakness. So our view, just to be clear, from now till kind of year end, early January, we're still pretty positive on the equity markets, and a couple reasons for that. Seasonality is very strong. November, December tend to be very strong periods for equity market returns. Breadth's been pretty solid. Momentum has been building. and credit spreads have been making new lows. So I think that's all very supportive for equity markets for the next, say, 8 weeks or so. I think our concern is more as we hit 2024, could see some weakness in the consumer, could see some, there's a number on the consumer confidence survey yesterday that jobs hard to get increased a little bit. So we could see some maybe softening there in the employment, in the labor market, and maybe some weakening in the consumer as we get through to 2024.
It's funny. It's interesting to listen to you, and I feel like it's kind of, you hear it even among the Fed speakers. There's not just one narrative. Some of those Fed speakers that we are just even hearing over the last couple of days, some are saying, okay, we're good. We think we're done. The Fed should be done. And others saying, maybe not, that inflation isn't where it should be. I'm hearing a lot of ifs, coulds in your conversation, and I get it, because I think, as we talked with our Mike McKee, it's not an exact science in terms of of managing the economy. The Fed doesn't have a ton of tools, and like I said, it's not like you just step on the brake and everything stops. There are delayed effects and cumulative effects. So having said that, you have conviction that maybe stocks continue to rally into this year. What else do you feel like you have strong conviction about when it comes to the investment environment?
So we're, as I mentioned, we're pretty positive on equity markets. There's some other areas where, when you look at equity markets year to date, it's certainly been driven by, the index returns kind of mask underneath. It's been driven by, large cap, mega cap growth companies. So we're finding some opportunity in other areas as well.
Like what?
Sure. So U.S. infrastructure is one area that we like today. We've had the Infrastructure Investment and Jobs Act in 2021, some allocation to infrastructure projects in the Inflation Reduction Act last year, and that money is just really starting to be allocated and spent. So we think that's an attractive area.
What specifically within it? So what specifically within infrastructure?
Now, the way we allocate portfolios, so we're asset allocators, and we build total portfolio solution for our clients. So we're going to allocate to a broad-based ETF that's targeting companies that can benefit from that increase in infrastructure spend.
That's an interesting thought on macro trends. What are some of the other macro trends and where you're allocating capital?
Japan is another theme that we like today in Japanese equities. A couple reasons for that. Fundamentals have been improving. Earnings growth is improving. A lot of the shareholder-friendly policies that companies that we've been talking about for a number of years are really getting put into play in Japan. So that's also positive. Relatively loose monetary policy compared to some of the rest of the globe, and valuations are pretty attractive. So that's another area where we liked. And we've seen the dollar sell off a little bit here more recently, which could benefit international equities.
Yeah, and then the Nikkei definitely has had quite a bounce back, certainly this year, certainly from some of the lows we saw earlier this year. When you talk about Japanese equities, by the broader market, or again, do you start to get picky about some specific sectors within Japan?
For us, again, this theme we feel is pretty broad-based, so we're going to allocate more broadly through a broad-based ETF in the Japanese equity markets.
Natural resources, also a favorite of yours. We've just got about 45 seconds left here. What specifically, when you think about natural resources?
Sure. I think another area of the market that is attractively valued relative to the broad S&P 500, companies there, again, better capital allocators more recently. We still think some structural supply demand that's favorable, and then more short term with some turmoil in the Middle East might also cause a problem. And then just the regulatory environment is really pretty tight for energy-related companies, and we think that's a positive.
Does that mean like the major integrated oil companies, the drillers, just real quickly? Okay, yeah, so you like the big names, the household names.
Yes, the larger. So again, we're allocating through a broad-based ETF, but about 80% of that is energy companies.
All right, good to know. Good to know. Amy Magnotta, she is co-CIO at Athegenos Capital. She's joining us on Zoom from Pennsylvania on this Wednesday. On a day where I feel like investors, once again, are really focused on what's happening along the yield curve and what's happening in U.S. Treasuries.
Well, the equity market is kind of a snooze right now. Maybe that's why.
I feel like we've had a couple of days where we're like, meh, meh, meh.
Dow's pretty much
meh.
flat, a bit green. S&P down 0.1%. The NASDAQ down a little more than 0.1%.
Yep, we're looking at 10-year at 4.26, a 2-year at 4.64. How you feeling about that?
Timing is everything.
This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Sources tell Bloomberg Cigna Group and Humana are in talks about a potential cash and stock combination to create another giant of the health insurance industry. A combination would create a powerful challenger to rivals, including United Health and CVS Health. Humana shares, though, they are down 5.2%. Cigna shares, they're trading lower by 7.8%. General Motors will boost its dividend by 33% and repurchase $10 billion of shares, its biggest ever buyback plan. General Motors shares, they're surging now by 9.4%. And in an interview this morning on Bloomberg Radio, GM CEO Mary Barra touched on a number of topics, including the outlook for its self-driving car unit Cruise, which last month suspended operations after one of its vehicles dragged a pedestrian for 20 feet.
And when you look at autonomous vehicles and the importance of this technology and the talent that we have at Cruise. We are doing an independent review from an incident perspective, but also overall from a safety perspective, and that will guide our path forward there. But we have a very capable team there.
And again, you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. General Motors shares, as we mentioned, up 9.5%. Rivals Ford up 2.4% today. And Stellantis shares, they are moving higher by just about 5.1%. And those are some of the top company stories that we're following for you at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Yes, indeed, everyone. Getting ready to wrap up the Wednesday trade. Carol Masser along with Tim Stenivek live in our Bloomberg Interactive Broker studio on YouTube, Bloomberg Originals. And we're going to head over to our TV colleagues in just a moment. Having said that, in terms of stories that have been popping out at us on this Wednesday, where shall we go?
Let's talk about OpenAI. That's a company we haven't talked about since last week.
Because that's all we talked about last week.
Yeah. Well, here's a great story from our own team here at Bloomberg News. 2 days after Sam Altman reached an agreement with OpenAI to return as its CEO, he spent part of his Thanksgiving with Adam D'Angelo, one of the company's board members, who had actually fired him the week prior.
Talk about frenemies. Their hours-long meeting, which Altman called really nice, highlights D'Angelo's unique role in a corporate drama that has captivated Silicon Valley and the importance of their relationship in restoring some stability at the world's best-known artificial intelligence startup. As part of the deal to bring Altman back, the board is set to be completely overhauled. With one exception, D'Angelo will actually stay on as director. His staying power, maybe a bit surprising, right?
Yeah, because he had a part in ousting Altman for not being, quote, consistently candid in his communications with the board, end quote. In an interview during the leadership drama, Vinod Khosla, the founder of Khosla Ventures, it's one of OpenAI's earliest investors, said he believed D'Angelo remained firm on his decision despite how much the move riled investors and employees. Carol, I'm almost done with the Walter Isaacson Elon Musk book, and I'm at the part now where Elon Musk is doing X.AI, and it's chronological, so they're in 2023.
Yeah.
And reminder, Elon Musk was one of the founders of OpenAI, and he had a split with Altman and disagreed with the corporate structure and said this thing is supposed to be a nonprofit. It's not supposed to be something that actually makes money, because he has a very different view on AI.
Well, and that's what's interesting, right? It was a nonprofit group, nonprofit board that supported
There's a diagram on its website.
And then they started another company in terms of the fundraise and capital raise, right? To be and to be much more capitalistic, if you will.
Yeah.
And that structure is kind of odd, but it's interesting that Elon Musk
He's very concerned about AI.
Yeah.
About it becoming more powerful than humans and what it could do.
All I'm going to tell you is, I don't know if I can say apples to apples, but we've got a story about deep fakes later on.
Yeah.
That will certainly freak you out.
That's AI. That is AI.
And then you roll on the increased capability of AI, and man, you're just going to want to run for the hills on this one. It's the cover story of Business Week. All right, right now we're back to the markets, heading over to our TV colleagues. Talk a little bit about the trade today. We're heading over there. Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu. We're counting you down to the closing bell. And here to help take us beyond the bell. It's a global simulcast with our friends Carol Masser and Tim Stenivek. Welcome to our audiences across our Bloomberg platforms. On a day, actually, we just saw, Carol, as the television shot showed the room that you and Tim are in, the big headline at the top of the screen there was stocks lose steam heading into the close.
It's like another meh day when it comes to stocks. And I think it's once again a day about we're watching where treasuries are. I'm still shocked, 4.26, I think, on the 10-year note. It's pretty remarkable. I've been thinking about, though, this lower rate environment, if it really sticks. I was curious about the banks. I'm looking at the KBW Bank Index. It's up 2% today. And I was trying to get my head around it. Is it this idea of maybe a soft landing? And so that's good for financials? Is it that they've already got loans at higher rates that are out there. They're making a lot of money maybe on credit cards if the default rates aren't too high. I'm trying to understand the rally that we're seeing specifically in financials today.
You got to have some math days in a month where the S&P 500 is up around 8.5%. We did just speak to Amy Magnotta, the co-chief investment officer at Athegenos Capital, who's really bullish toward the end of the year and early January, saying that stocks are going to continue to rally at the end of the year, but may lose steam toward the beginning of next year.
And maybe it's people looking ahead as well. Banks have been a value trap for so long that if you're looking around to see what might provide some value, you could always look at banks. On a day where oil prices are climbing before the OPEC Plus meeting, you have energy stocks down 0.9%. So the traditional levers that you would count on to drive certain sectors are not really working here.
Yeah, interesting price action. It kind of makes you wonder, too, who actually is doing that. You look at some of the block trades we got this morning, a lot of this price action being driven by a very small group of people. The net effect of it all is a market that, at least on this Wednesday afternoon, is relatively unchanged. The Dow Jones Industrial Average is going to hold on to its gains, but only up by about just a fraction of 0.1% here, about 14 points higher. The S&P lower by 4 points, or about 0.1%. The NASDAQ Composite lower by 23 points, or 0.2%. And we just talked about those small caps here. That is your outperformer on the day, 0.6% gain for the Russell 2000.
Yeah, and I'm going to go back to the big caps, if I may. S&P 500, you're looking at about 285 names gaining ground on this Wednesday, 216 to the downside. And Scarlett, we've got about 2 unchanged here.
And for Met Day, trading in the S&P 500 is actually about 15-16% above the 20-day average. So that's a head scratcher. All right, let's take a look at the industry groups. You've got banks. Carol, you mentioned KBW Bank Index. All 15 names in the S&P 500 are higher, led by Key Corp. And then consumer durable and apparel up by 1.25%, and real estate investment trusts bring up the rear. On the downside, you have media and entertainment losing 1.4%. Energy stocks, food, beverage, and tobacco each down about 0.9%.
All right, guys, let's get to some of the individual gainers, if I may, in today's trade. Foot Locker, really an outperformer, up 21% at its highs today, finishing the day with a gain of about 16%. The company raising its full-year forecast, citing strong results over the Thanksgiving week and progress in its strategic growth plan. The retailer now expecting a full-year comp sales decline of 8.5% to 9%, but the previous forecast was of as much as 10%. The CEO, Mary Dillon, calling it a reset year for the company. She did talk about the consumer, though, and I thought this was interesting. On a conference call with analysts, she said customers remain discerning with their discretionary dollars. She said she expects that economic backdrop to remain as retailers charge into the crucial holiday shopping season. So we'll watch holiday numbers as we move along here. General Motors, got to mention, that is the number 2 gainer in the S&P 500 today. That stock finishing off its highs, but still with a 9.4% gain. Yeah. And this after the biggest ever buyback. You want to do Salesforce?
Yeah, Salesforce earnings are crossing the wire right now. Interesting numbers here when we talk about what came in the third quarter. Operating income looks like it's coming in at a beat at $2.72 a share. As far as the revenue, that was up about 11% year over year. $8.72 billion is the number. And I'm not quite sure what the comp is on that here. Actually is a beat, excuse me. The comp is $8.1 billion, so a slight beat for revenue in the third quarter. Here's your forecast for the fourth quarter. The company is saying that revenue will come in a range of $9.2 billion to $9.23. That's pretty much around what the street was looking at on average at 9.22. And adjusted EPS also looks like it's going to be just around what the street was looking for, a range that the company is giving of $2.25 to $2.26.
And what's notable as well about Salesforce is its operating margin is 31.2%. That is higher than what analysts had anticipated. They were looking for 30.4%. And Salesforce has done a lot of work on improving profitability. That's been its focus. What it really needs to focus now on is reigniting sales growth, because that 11% increase in revenue remained that you just mentioned at $8.72 billion. That is the third straight quarter sales have grown 11%. And that's something investors are going to start fixating on.
Yeah, Mark Benioff is certainly fixated on it. He, in the press release, saying, quote, "We're now the third largest enterprise software company by revenue, the number 1 AI CRM, and the number 1 enterprise apps company." He says they're bringing AI, CRM, and trust together in a single integrated platform. Right?
Well, the question, though, is really when do you sort of get a return to some of that sort of phenomenal growth that I think investors have gotten used to? I mean, we're now talking about low double-digit growth for a company that had been growing at 20, 30% on a quarter-to-quarter basis here. So if AI really is the salvation here, why aren't we seeing the same type of growth rates that we're seeing for some of the other companies that are in the AI space.
Well, meantime, we are seeing now Salesforce up about 2.9% here, and the company so seeing a little bit of a kick to the upside now. Also talking about fiscal year revenue of 34.75 to 34.8 billion. It had seen 34.7 to 34.8, so it looks like it's basically kind of confirming that forecast, Scarlett.
And I'm glad you bring up the AI question, because that's something that everyone's going to focus on in the conference call. We know ServiceNow, a competitor, raised its full year guidance, and in particular, it cited AI strengthening the market dynamics for enterprise software. So that's the question that's going to be put to Salesforce. What does AI do in terms of the sales of its products, in terms of its other product lines?
There's also a question, too, I guess, about the strategy that Benioff takes. I remember, what got this company to the size that it is right now is because of acquisitions. And we know, given the activist investors who, of course, really put a lot of pressure on him, and really just kind of overall market forces that said, look, we want you to be a little bit leaner, or at least a little bit more efficient in costs, and that means not just shelling out, $20 billion for every company that, catches your eye.
Well, how much of that has to do with, a higher interest rate environment versus a lower interest rate environment? It was interesting. Benioff was, kind of a player in the last week over the OpenAI saga when he was offering jobs to anyone who would leave OpenAI. And he actually got some pushback and said, we're not interested in coming to a company like Salesforce. We want to stay at OpenAI if Sam Altman indeed comes back.
All right, everybody, we continue to hear from the software application infrastructure software company. Snowflake just out, and the stock's up about 8% here in the after hours. So it is popping in a big way. Let's go through the numbers, and let's get to fiscal year adjusted operating margin, 7%. It had seen 5%. That is quite a bump up to their outlook there. Third quarter revenue. So let's go back to the quarter that they just went through. 734.2 million. The estimate is 713.8 million. Third quarter adjusted diluted EPS, 25 cents a share. That is 9 cents better than what the street was expecting. And they see fiscal year product revenue of 2.65 billion. They had seen 2.6 to 2.61 billion. So that's pretty optimistic. Stock's up about 22% this year, but nonetheless, investors definitely very much pleased with what they're hearing about the outlook in this company, up at about 9.5% now.
Yeah, that's the best performing stock in after hours trading. I do want to flip just real quickly to the worst performing stock in after hours trading, which is another software company, and this is Pure Storage, obviously a much different business here. But when we talk about sort of the guidance that these companies are giving and whether they not only meet the expectations in terms of beating the targets, but really provide investors with enough semblance of where the growth is going to come from, you're definitely not seeing it here. The company basically in line on the quarter, most recent quarter in the third quarter, but that fourth quarter outlook causing some concern, particularly on the margin side, which they're forecasting is going to come in weaker than what the street had expected.
It's so interesting to me to hear these software companies, enterprise software companies, as a proxy for IT spending by companies in an environment where we already know consumers continue to spend, even with the signs that the economy is slowing around the corner early into next year. To what extent are enterprises and companies much, much more cautious than consumers who continue to spend?
I guess it depends on where they're spending. Are they spending on, enterprise AI or enterprise data, or are they spending on security and IT to sort of keep their companies safe?
Well, I think we talked, I don't know if it was yesterday, but we talked about this recently, with Zuckerberg and that year of efficiency.
Yeah.
I think a lot of people woke up, a lot of CEOs woke up, and they saw, look, there's a lot of fat that they can trim. And when you look, I know Meta was kind of an outlier in terms of some of the excess that they had, but when you can cut that much from your company and actually grow revenue and profitability,
and raise prices like Salesforce did for the first time in many, many years.
Right, and there are a lot of these big tech behemoths that watch that, and they're seeing that, and they're trying to replicate it.
I also would argue that so many of these companies, they kind of, companies have to spend on what they offer in order to run their business, whether it makes them more efficient, whether it's data analysis, and this is kind of what they need, it's essentially to do their business. So I don't know. I don't know. This group has been on fire.
I like it when you end comments.
That is, I do that all the time.
It's a ... scenario.
It's like my conversation with my kids or my husband. I don't know. All right. Anyway, but it's a group that's been on fire.
Sorry?
Yeah, see, he hasn't heard.
I didn't hear.
Pong?
Pong.
You mean like the game?
Yeah.
Pong?
It's a happy birthday, Pong. 51, did I see?
Yes.
Yes, 1972 on this date in history. I'm just, I've been walking around the office talking to everybody about this, and there's definitely an age demographic that knows what I'm talking about, and another age demographic that thinks I'm just
I know
crazy
what
old
Pong
man.
is.
Just culturally illiterate.
Who didn't hang out in the pizza shop and play Pong?
Yeah, or have it at home on the Atari. We used to play that for
Our
hours.
producer Googled it and looked at it on her screen and was just laughing that this was actually even.
Is there an app for it, I guess?
Yes, there is.
Okay, there it is.
Get it on
Did
Apple.
she say, I don't know?
No.
Our producer Matt plays it on his Apple Watch. for about 2 minutes, and then he gets bored. So.
All right, Salesforce still up about 4.6% here in the aftermarket. We're seeing definitely
bring that Pitfall. You don't remember that game?
That was a good game.
Yeah. See, I like Scarlet.
Frogger.
Who doesn't like Scarlet?
Centipede.
She's like our company gem. All right, guys, that
This
is
it.
a
The
wrap.
long goodbyes, always with Carol.
I don't know. All right, that's a wrap. Our on radio, TV, YouTube, and Bloomberg Originals. Guys, have a good and safe evening. We will see you tomorrow.
And that's why everybody wants a piece of the action.
Yeah, I don't know. Also applies to, I don't know what's going to happen with the IPO market, although it does feel like it's thawing just a bit here, Tim.
It does feel like things are thawing just a bit. I mean, Birkenstock actually traded above its IPO price today for the first time, so that's kind of a big deal, Carol. Then yesterday, our team here reporting that the temperature-controlled storage facility provider Lineage Logistics is targeting valuation more than $30 billion in an IPO. That could be one of next year's largest listings. Reddit?
Yeah.
I am so late to the game.
Again, holding
I
talks.
finally created a Reddit account over the weekend. It's a good place.
I know a lot of people who spend a lot of time on Reddit.
It's like everything's super niche.
Yeah.
Yeah, like you can find an answer to anything there. It's been
You can find your people.
Yeah. Or you can find people to save you money on
Tell you how to
trying
do
to
anything.
fix stuff in your
Didn't you
house.
ever
That's
Google,
what I found.
Didn't you ever Google something and it's like, all right, there's a Reddit group that has answers to the questions.
Yeah, it's pretty cool.
All right, so let's get to it. IPOs, of course, have been on hold for months by volatile markets and a relatively weak showing for 4 closely watched debuts in September and October, which all but slammed the door on big-ticket IPOs in 2023. That has been the year. Amy Orr is equity capital markets reporter for Bloomberg News. She's got to watch all this stuff and make sense of it. She's here in our Bloomberg Interactive Brokers studio. Is there a word to describe the IPO market right now?
I guess it's hopeful.
Yeah,
because
hopeful.
we're almost past that stage where we're like kind of betting on this year going to be like the year, and then we've given up hope. So I guess like we're looking forward now to the next year, and then hopefully, yeah.
Well, it's so funny because I was thinking back to the last few months, and there was a period I think like end of August, early September, maybe end of summer, early fall, where you were in our studio like every week, Amy, and there were this host of IPOs.
You guys don't want me back, and then
Well, I hate to say it, but if there are no IPOs or if
That's
there's nothing
very
happen,
true.
then what are we going to talk to you about?
I know that's also true, and then it's all doom and gloom, right? And then I
Right.
think, especially after November, after the market rally, and then everyone is just scratching their head as to why the IPO market is not open. Like the fundamentals are there. Like if follow-on market is so strong, why IPO isn't?
We
open
talked to a
yet?
very wise man here who used to work on Wall Street and was involved in deals, and it's like, that's BS that they can't get a deal done.
Yeah.
That, if you had to do something, you could get these deals to market.
Give us some hints on who you talked to.
I'm not even going to give you initials. But what's interesting, so what is it? I mean, this whole idea of a market environment, I mean, stuff's happening. Companies are doing big M&A deals. Like, stuff is happening.
Yeah.
So why is it that the IPO market is not really happening?
Like you said, as in most of the bankers always say, there is a price to everything, right? So, like, if you're willing to sell, there is someone willing to buy at what price. And I guess there probably is the crust of the matter is people's like expectation in terms of pricing is still not like coming back to terms with what they are like they should be, and also the fact that the public market has rallied so much, and people are like, well, maybe I can actually get a better price if I just waited for a little bit more.
How much is to that? There's just been so much private money sloshing around that it enables a lot of companies to stay private much longer.
It's really strange because, like, if we look at the pre-IPO market investments, right? So venture capital hasn't actually been used that much. I think, like, if I remember, it was 130 million. Like, it's almost like just one check in the past. So, like, there hasn't been a lot of, like, kind of pre-IPO investments or top-ups. So, I don't know. Private credit has been talked about a lot, but
You don't see it?
Yeah.
Interesting.
Okay, so what gives you optimism or hope that, not you maybe, but the sources you talk to, that they are hopeful right now?
I guess they just have to be hopeful. I guess bankers are just, optimistic
Is
bunch of
Reddit
people,
going
right?
to do it? Is Reddit going to finally do it?
But here's the thing.
No, but my point is, are people going to be like, Reddit did it, we can do it?
I don't know. Are you asking? You're not asking me. But
I'm asking Amy.
Okay, Amy, answer the question.
So to be
then
sure, I'm not even sure if Reddit is going to be the first. It might be among the first group of people in the first half.
Is Shein going to be it?
Probably, but there are so many, like for these two companies, right?
Look at
They
this,
also
look at
have
this.
their own
Calendar of equity issues this week, of price this week. I printed it out. There's nothing on it. See, look, there's nothing on it, everybody. Anyway, sorry, go ahead.
No, and I think the people are looking, like for Shein and Reddit, they both have their own like story that they need to tell or convince investors, right? Shein is founded in China and has like maybe there are questions and accusations still about like where its sources cotton and also whether there's going to be forced labor, and also not to mention the fact that they sell clothes so cheap, and environmentalists are all talking about
That's a tough story.
It's a tough story.
But is it a story that shareholders care about, potential shareholders?
Well, it depends on where
if they're
you
selling
look,
clothes,
right?
If they're selling clothes, that's all they care about, right?
And also the fact that they're already backed by quite a number of investors, including Fidelity, is already in like pre-IPO, so you expect them to be participating in the IPO itself. So like it depends on where you actually put the focus.
What did ARM do for the IPO market?
ARM actually injected a shot of confidence, right?
Because you told us, don't pay attention to what it does on the first day. Don't pay attention to what it does in the first couple of days, the first week.
Yeah.
Come back and talk to me a few months later. And that's where we are.
I think if you still talk to the people, so it's raised money, which is a great thing. So compared to the people who haven't actually been able to raise money, so that's already a great deal. And then, to be honest, ARM has fared like much better, like compared to Birkenstock, right? So like you mentioned just now, Birkenstock just like recovered its IPO offer price. So like in terms of that, it's not that bad. And it's really funny because I went to NASDAQ and then they actually had a replay of what actually happened, like minute by minute. And they actually see all the like the orders coming in as well. And there is actually a pretty decent book from what I saw. So yeah, I would say ARM was actually a pretty good deal, like coming back to it. Nobody expect, like it depends on what is the definition of a good deal, right? So from an investor or retail investor point of view, if you rise 30, 50%, it's a good deal. But for an issuer, that's money lost, like putting on the table. And also that's technically kind of wrongly priced deal. So like depends on where you want to, like which perspective do you see it from?
Okay, so any idea, does it feel like 2024 we could see things loosen up? And what are you keeping an eye on?
I hope so. Like the pipeline is very strong, as everyone would say. And also there are a lot of criterias or reasons why. Some of them are already private equity backed, venture backed, or they're staff owned. So there are reasons for them to be selling shares. They have a need to actually recoup the money. And some of the private equity or venture capital funds, they are already kind of way into their kind of harvesting kind of period. So there is a lot of push factors. And whether it's going to draw investors in, that's going to be another. And also, like technically, where equity is rising so much and VIX is down, like technically this should be an open window for everybody. And that's also the reason why I said a lot of people are scratching their heads as to like why it didn't work.
What's a good metric for us to look at to say whether or not 2024 is a successful IPO year? When the year is done, what's the number that we should be looking at? Like what's a good number? 2021 was a little nuts. But
yes.
in 2022 was
2020 and 2021 were just like banner years. And then I think this year so far is 23 billion, which was like slightly better than last year, which was 18.6.
And I'm looking at the IPOC SPAC index. It's up about 15% year to date.
Yeah.
But
on a
what should
normal year, it would
like?
be 50.
Okay.
So, and looking at around like 50 IPOs or so, and then we haven't really, like sizable ones, decent ones, not the really tiny ones, which like we don't know the names of, or like that they listed and nobody cares about kind of situation. So like decent ones.
All right, we got to run. Good stuff. Amy Orr, Equity Capital Markets reporter for Bloomberg News, watching the IPO market. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Lots of earnings after the bell, and we've got you covered. Salesforce out with a profit forecast for the current quarter that topped analyst estimates, showing strong momentum in the software giant's cost-cutting campaign. San Francisco-based Salesforce shares after hours, they're up now by 7.1%. Snowflake out of San Mateo, also in the Bay Area, delivered a profit sales outlook for the current quarter that beat expectations, fueling hope that revenue has stabilized after the software maker experienced a dramatic slowdown in growth during the past year. After hours, we got Snowflake moving higher now by 7.8%. The Dow finished higher today, up 13 points, well off session highs at 35,430. The S&P, though, gave up earlier gains, moving lower by 4 points to 4550, a drop of about 0.1%. The Nasdaq Composite Index was down 21 points, a drop there of 0.2%. 10-year yield 4.25%, with the 2-year that's yielding 4.63%. Spot gold today up $3.50 the ounce to $2,044. A gain there of just about 0.2%. West Texas Intermediate crude up 1.6%, 77.66 a barrel on WTI. Bitcoin down 0.5%, back below 38,000. Bitcoin at 37,761. So again, recapping, the Dow higher, S&P, Nasdaq both lower. S&P down 4, down 0.1%. 10-year yield 4.25%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, as pandemic worries have faded, the travel business has definitely come soaring back, with airline traffic more than doubling since its COVID era trough, and waiting times for deliveries of new commercial airplanes mostly stretching through the end of this decade because of robust demand. But there is one travel segment that seems a little bit stuck in a holding pattern, and that is corporate-owned jets.
So wrote Bloomberg's Thomas Black earlier this month. He reports on the aviation space and noted that even though the number of flights operated by the broader private aviation industry, so that includes charter, fractional, individually owned aircraft managed by third-party service companies, pretty much all the ways that you fly around, Carol.
Totally.
Yeah.
Not.
It's almost 19% higher than it was back in 2019. That was the last full year, pre-pandemic year. Companies' in-house flight departments are flying about the same as they did, Carol, 4 years ago.
It's interesting. That's according to data from WingX. It's a Hamburg-based provider of market data and analysis on the private aviation industry. We've got a great voice on this. Back with us is Janine Yanarelli. She is founder and president of the private aircraft broker Par Avion, and she really sees daily what is going on minute by minute in the private aviation world. She's here in our Bloomberg Interactive Broker studio. Welcome back. How are you?
Oh, delighted to be here. Thank you for the invitation.
It's great to have you here. Tell me what you said, though, when you walked into the studio and you were listening to our segment on the IPO market, which seems like it's having a tough time getting going, and how that kind of related to your industry.
Yeah, just take your last guest story and /IPO and insert the word jet.
What's going on?
That's a good question. What we have observed throughout the course of 2023, the buyers are sitting on their hands, and they've created excuses, and I would say the trade has as well for them, quarter over quarter. So here we are. We're at the end of the year. This should be the busiest time of the year in the aircraft trading marketplace, and it's relatively quiet.
Wait, I thought that we saw huge announcements from companies like NetJets buying many Cessna Citations, for example, earlier this year. That doesn't count?
In a way, no, because that's the fractional share and they need to meet demand. Actually, fractional flying is up year over year. I want to say the number is somewhere like 7.9%, whereas private flying is down 8.3% year over year.
Wait, how can those things both be true?
And Thomas Black in his story said flights from fractional operators, so we're talking about NetJets, FlexJet, have increased 41% from 2019 levels. That's
You're still flying private when you use one of those operators, so make the distinction for our audience.
So the private sector and the corporate sector is whole ownership. These are individuals and corporations that go out and acquire the asset, and the management, the crewing.
It's the company jet.
It's the company jet. Whereas with the fractional
flies all the time.
No, go ahead. You're buying a piece of an airplane, And so you have access to uplift pretty much on demand, but you don't own the whole aircraft and you don't control the operation of it.
This is exactly what our own Thomas Black wrote about earlier this month. And the question is that I have for you is that era kind of over when it comes to private ownership? We've seen pushback from shareholders about flying private. So now we're about actually these companies owning corporate jets because of the carbon footprint. So companies are now, not actually owning their jets outright and instead using those fractional services, which do offer the on-demand private flying. So the benefits of flying private without actually owning that asset.
So it's a conundrum. I don't think demand has diminished. It's just action has diminished. We really don't see people pushing away from private jets and looking for other means of transportation. It still is the most efficient form of moving goods and services, goods and people around the country, around the world.
But they don't want to own it.
Not necessarily so. I mean, I personally have not experienced people say, sell the jet because of all the issues that you just cited. There are ways to reduce their carbon footprint, smart flying, direct flying in the United States is going to lead the way. Operators within the United States are going to lead the way to that goal of 2050.
But Janine, you broker deals, right?
Correct.
So how much is your deal flow down this year from, I don't know, is it the peak post-pandemic that you measure against? I'd be curious about that. And also where it was maybe 2019.
So good questions. My business is off significantly, but I attribute it to the aircraft that I'm actually offering. I mean, the market's sort of...
You don't like your inventory?
I love my inventory.
But it's not what people want?
It's not in favor with the market today. The most active segment of the business aircraft marketplace, I would have to say, is the small jet. That is the aircraft that initially led the decline and then started the rise back out of the global pandemic.
So what is this, like a 6-person?
Exactly.
Yeah.
I put it more in a dollar perspective, but 6 to 8 passengers, somewhere $2 to $7 million. And the aircraft range is going to be anywhere from about 1,000 nautical miles to 1,500.
So what don't people want then?
Now?
Yeah. What is it that they don't want?
It seems to be the category that I would call the super midsize and the ultra long range aircraft.
Why don't they want those?
It's a good question. It's a really good question. So first of all, if we talk about the ultra long range, that's the pinnacle of the marketplace. And the price point for those airplanes is anywhere from $50 million on
This
and
would
on
be
up.
like a Gulfstream G650 type
Correct.
thing?
Yes.
Okay.
Tim's a little bit into planes.
I can tell. So that seems to have fallen out of favor. I mean, there are buyers out there, and there are plenty of inquiries. I mean, if I just look at the number of inquiries I've received year to date on every single aircraft I offer for sale, it just boggles my mind that not one person has stepped up to make an offer. Maybe more interesting is, let's say I get 200 inquiries over the course of 3 months on an aircraft. My guess is 10% are really going to buy an aircraft, but less than 10% of that 10% have actually done anything.
Forgive me, but do interest rates matter? I mean, when we're talking at this type of money, they don't matter for real estate, but they matter for, at least that's what high-end real estate.
I mean, do they
brokers tell
finance
us.
these deals? Like, that's a good question.
So another good question. My personal history is that I can count maybe on 2 hands how many people actually needed financing throughout my entire career.
It's a cash deal. Is it typically a cash deal?
Needed versus using financing are two different things. There are plenty of people who could pay, outright for a $40,000 or $60,000 vehicle, but if they get 0% financing, then they're going to take the financing.
Exactly that. Now, I have a number of prospective buyers that they may pay cash outright and then refinance later on. Most of them do that with a financial institution that they already have a business relationship with. The odd inquiry that I may receive for aircraft financing, frankly, is a little bit of a red flag for me, because they shouldn't be asking me. They already should have that in place.
Right. Right. They've got their bankers. They've got the bank that they've been working with for years on everything else.
They're qualified, the
and they
KYC,
just come in.
everything.
It's interesting. I'm thinking about our audience. So how do you then use what you are seeing to maybe tell you what's going on in the global economy? Is it an indicator for you, or is it just maybe your business, your industry is going through some changes?
I would say flip that and say business jets are the indicator. And they always have been. Now, I think we're writing new history and have been since 2019 because you could take the playbook and throw it out the window. Looking back over 23, I was musing over the fact that we're going to chalk this year up to a year of rebalancing. And I'm wondering if this was not the downturn that always follows a great upswing. And 24, because I'm going to use it to project a little bit, is going to be relatively quiet. But the driver for that is mostly the presidential election and the uncertainty that comes along with who will be our new administration and what policies will go into effect.
Well, President Trump was pretty friendly to private jets.
To a certain degree. I mean, some of those,
there were tax breaks that were given to people who used private jets during the coronavirus pandemic, for example.
Well, that's true. The bonus depreciation was a huge driver to motivate people to buy aircraft.
What are you, 20 seconds, what are you worried about in terms of the presidential outcome and in terms of regulatory or oversight? And I've got to ask you to be very quickly.
I'm mostly concerned about tax implications. There's a lot of those expiring in 25. That's really the bigger concern.
Really fascinating, right?
I could talk about this all day.
I know. It's a world we love talking about. We didn't even get into eVTOLs, which I know is a big thing. Next time. Come back soon. Love to continue the conversation. Janine Iannarelli, founder and president of Par Avion, a private aircraft broker. You can check out some of the stuff that she is involved in on her website here in studio. Have a good holiday.
Let's get a check now on the latest world and national news. We got Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. The Israeli military says Hamas has released 12 hostages from captivity in Gaza as international mediators work to extend a ceasefire that will soon expire. Israel is expected to release some 30 Palestinian prisoners in return. It's the sixth exchange between the two sides. This is happening with U.S. Secretary of State Antony Blinken set to arrive in Israel tomorrow for his third trip to the region since the conflict began.
We'll discuss with Israel how it can achieve its objective of ensuring that the terrorist attacks of October 7th never happen again, while sustaining and increasing humanitarian assistance and minimizing further suffering and casualties among Palestinian civilians.
Blinken says an extension is something the U.S. has been pushing for since it means more hostages will be released, possibly even Americans. As lawmakers consider more aid to Israel, Senate Majority Leader Chuck Schumer, who is the highest-ranking Jewish elected official in the country, spent 45 minutes on the Senate floor today decrying the rise in anti-Semitism that is at a level not seen in decades.
The normalization and exacerbation of this rise in hate is the danger many Jewish people fear most.
The Anti-Defamation League says anti-Semitic incidents have nearly quadrupled since the onset of the war. Schumer says it's time for a clear-throated denouncement of that hate. There will be heavy security in place for the Rockefeller Center Christmas tree lighting ceremony tonight. Hundreds are expected to gather around the 12-ton, 80-foot-tall Norway spruce that came from a property just outside of Binghamton, New York. The NYPD is ready for protests as pro-Palestinian organizers have posted on social media for their supporters to flood the ceremony. Global news 24 hours a day and wherever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We've got Salesforce shares up now by 7.1% after ours. Salesforce delivered a profit forecast for the current quarter that did top analyst estimates. Snowflake delivered a product sales outlook for the current quarter that beat expectations after ours. Snowflake up now by just about 6.8%. We also heard from Synopsys. It forecast adjusted EPS for the first quarter. That guidance did beat the average analyst estimate, and after our Synopsys now up by about 2.3%. The Dow higher, S&P, NASDAQ both gave up earlier gains today. The rally that's driving global bonds to their best month since 2008 gained further traction. Treasuries climbed on bets the Fed will start cutting rates in the first half of 2024. But what about the equity market advance? Can it continue between now and the end of the year? Amy Magnotta is co-CIO at Genus, and she was a guest right here on Bloomberg Business Week.
From now till kind of year end, early January, we're still pretty positive on the equity markets, and a couple reasons for that. Seasonality is very strong. November, December tend to be very strong periods for equity market returns. Breadth's been pretty solid. Momentum has been building.
And you can hear more of that conversation on the Bloomberg Business Week podcast. Today, the S&P down 4, drop of just about 0.1%. The Dow up 13, little changed, up less than 0.1%. NASDAQ down 0.2%. Cannot ignore the Russell 2000 today. It was up by about 0.6%. Put that in context, S&P down 0.1%. 10-year yield 4.25%. 2-year 4.63%. Gold up 0.2%. 20.44 the ounce. And West Texas Intermediate crude up 1.7%. 77.68 a barrel. Again, recapping, stocks ended the day mixed. S&P down 4 points. Little change there, down less than 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm telling you why. Santa Claus is coming to town. Santa Claus is coming to town.
That's right, everybody. Santa Claus is coming to town at the most wonderful time of the year. The air is crisp. Bloomingdale's has its holiday window display up. People are decorating their Christmas trees and decking the halls. And a large team of Santas are coming to town, appearing at malls and retail outlets around the country. He's everywhere. And sometimes she's everywhere. I'll explain that in a moment.
That's true. Hey, this year, things are a little bit different than years past, though. Demand for Santas is actually far exceeding supply, at least according to our next guest, who knows quite a bit about goings-on at the old North Pole. Mitch Allen is the founder and head elf of Hire Santa. It's a Santa Claus talent and staffing agency. And what it does is it places Santas at events, parties, malls, and more all over the U.S. Mitch joins us on Zoom from Southlake, Texas. Mitch, good to have you with us this afternoon. So the Santa biz doing pretty well in 2023, no?
It sure is. We've had more demand for Santa Claus entertainers than we've ever had before, and all types of it, whether it be a home, office, retail establishment, malls. Everyone wants to associate themselves with Christmas through the use of Santa.
Totally get it. I'm also a fan of Elf on the Shelf. Just going to put it out there. Hey, Mitch, so are numbers up? Demand is up from what? Pre-pandemic levels? Like I don't know, is it just you've been seeing organic growth? Has there been a recent peak? Give us an idea. Give us some perspective.
Sure. So here at HireSanta.com, we've seen the demand for Santas, people reaching out to us, is up over 36% over last year. And last year was record demand, even higher than pre-pandemic. And that's turned into more events. Our actual events that we've booked is up over 152% over last year, and many times that over pre-pandemic levels. So people are using it. And what's interesting is we don't necessarily have a Santa index, but that's what I'm calling it, that small and medium-sized businesses are really using Santa this year. I think that's going to be a blockbuster year for small and medium-sized businesses if the demand for Santa Claus at these establishments is any indication.
How much does it cost to rent a Santa?
Yeah, so it really depends, date, time, location, and how long you need Santa. But,
okay, during the Christmas season. I'm not talking about a July Santa here.
Everybody's invited. We're talking about 4 hours. I need Santa.
Right. So if you need Santa to come to your home or office for just a couple of hours, you're talking about $200 to $400 per hour for a Santa Claus entertainer. Now, if you do it for a mall, the hourly rate is obviously much less.
So do Santas, do those who really look like Santa? Sorry, kids. I hope none of the kids are. Man, we should have done a disclaimer. If there are kids in the room, get them out of the room. I'm sorry for everybody in the control room. Yes, Virginia, there is a Santa Claus.
Okay. I don't know where you were going with that.
I'm going to be really careful. But Mitch, so for those who, really look like Kris Kringle, do they get more money?
Absolutely. So at Hire Santa, our Santas, we like to say, have a real beard, a real belly, and are real jolly. They've got that twinkle in their eye, that love and joy of Christmas in their heart, and they really do personify the image and personality of Santa Claus.
What about the demands that you're getting right now from different people across the country who are saying, well, you know what? I don't actually want a Santa that looks or sounds like the traditional Santa Claus. We're looking for more diversity when it comes to Santa.
Maybe I want a Christine Claus rather than
a what are you getting requests for?
Kris Kringle.
So diversity is one of the big trends that we're seeing in the Santa Claus entertainment space. We have a number of Black Santa Claus entertainers as well as Spanish-speaking Santas. People are wanting to have a Santa that looks and sounds like they do. We even have a deaf Santa that we send around the country. He's entirely deaf and speaks ASL, American Sign Language. So we've seen the demand for diverse Santas really grow up. And as you pointed out, we actually have a couple of female Santas who are terrific. You would not know that they are females. They look and act like Santa and are really great entertainers.
You mean so they're not actually being a female Santa? They're actually being a female that is pretending to be a male Santa?
That's right. You think of like Tim Allen, glue-on beard. You would not know unless you actually saw them outside this suit that they were not actually Santa. But yeah, diversity is one of the big trends. We also see experiences. People just don't want to have their traditional picture with their child on the knee of Santa. They want to have an entire experience. And so many of our clients are really increasing the experience where there's lots of sort of Instagrammable pictures and other types of experiences, cocoa, hot chocolate, and those types of things, along with the picture with Santa.
All right, Mitch, is there a Santa school?
This is one of the surprising things that people don't realize. There is a vibrant Santa Claus community out there, whether it be online or in person, lots of organizations. There's Santa schools and conventions around the country, and that's where we go and recruit our Santa Clauses for HireSanta.com.
Hey, how seasonal is your business?
Well, the actual delivery of our service is extremely seasonal, about 6 or 7 weeks, but it's a full year business at Hire Santa. The first half of the year is really about sales. It's getting those large contracts, those malls, those retail establishments. We're working and we're trying to get those contracts as well as we're trying to get more Santas. This last year, we added over 1,100 Santa Claus entertainers to our database alone. And so it is full season, but really it's go time. It's fourth quarter during the last part of November and, of course, all of December.
All right. So what's interesting is you shared with us some research that you guys have done, and some of the Santas talk about their best experiences of 2022, which are incredibly heartwarming. But I want to go to the worst experiences of 2022. What are some of the rough experiences? We have about 45, 50 seconds left. Just give us a couple.
Well, the rough experiences are really when Santa gets sick or injured. Every single year for us, we lose Santa Claus entertainers. You can imagine they're older gentlemen. They're susceptible to COVID and negative outcomes with that. We've had this year alone, we had Santa's already in a car accident. A wife got sick. Those are really heartbreaking themselves. As well as you really get the touching things whenever a child is wanting something, they're sick or their parents are sick and they're wishing something for them. But it's a wonderful time, and Santas really enjoy spreading that love and joy of Christmas.
I thought you were going to tell me about the Santa that flubbed the lyrics to Frosty the Snowman at a daycare.
That's what you were expecting.
That's what I was hoping for.
The kids at the daycare didn't
a little
know,
levity.
Yeah. We get that a lot too. And when we've actually been on air and asked somebody, Santas, to name the reindeer, and they just froze. And so Santas have to know the names of the reindeer.
There are a lot of them.
Mitch Allen, Merry Christmas, Happy Holidays, founder and head elf of Hire Santa, joining us from Texas, where there's Santas.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. General Motors shares up today by 9.4%. GM boosting its dividend by 33%, repurchasing $10 billion of shares, biggest ever buyback plan. In an interview this morning on Bloomberg Radio, GM CEO Mary Barra touched on a number of topics, including the outlook for its self-driving car unit Cruise, which last month suspended operations after one of its vehicles dragged a pedestrian for 20 feet.
What we have learned with this incident is it's got to be significantly better than a human driver to drive adoption, and we have to do a much better job of working with the regulators. That's something that GM has a long reputation of working and being transparent with regulators at the local, state, and federal level. So I think as we do that and get the results of the independent review we're doing, that will guide us on our path forward from a AV perspective.
And again, General Motors shares today did advance by 9.4%. Rival Ford was up 2.1%. Stellantis shares today up by 5.1%. And by the way, you can hear more of the conversation with Mary Barra on the Surveillance podcast. You can download it wherever you get your podcasts. Tesla shares moved lower today in the run-up to its Cybertruck delivery event. Tesla designed its stainless steel Cybertruck to be something special. First vehicle for the masses. It does not require paint. It is no easy feat. The only other company to come close, DeLorean, and it sold just 9,000 cars before filing for bankruptcy in 1982. Tesla today down 1%. Those are our top company stories, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
It's Bloomberg Business Week. Carol Master and Tim Stenivek live in the Bloomberg Interactive Brokers studio in New York. Let's go to Washington, D.C. now for a check on the latest world and national news. We got Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. As the latest truce between Israel and Hamas nears an end, negotiators from Qatar, Egypt, and the U.S. are pressing for another extension to try to secure the release of additional captives and to avert a resumption of the war that erupted almost 2 months ago. Bloomberg's Ethan Bronner is in Tel Aviv and says if the pause stops, Israel will immediately go back to attacking Hamas.
It is clear that they want to go after the leaders of Hamas and its military infrastructure. They are saying that they've killed about 5,000 Hamas guys. They were saying there were about 30,000 of them. So, you know, from their perspective, they've made progress, but they've hardly gotten everything they need.
Bloomberg's Ethan Bronner. The Israeli military says 10 Israelis, 4 Thai nationals, have been released today from captivity in Gaza, with about 30 Palestinians expected to be released by Israel. Well, there are no specific or credible threats, but pro-Palestinian supporters do plan to crash tonight's Rockefeller Center tree lighting in New York City. The group, Within Our Lifetime, says it wants to flood the festive event for Gaza, calling it for mobilization, not celebration. The NYPD is stepping up security and calling for increased vigilance. Well, girls and boys born in the U.S. last year both saw their life expectancy improve. That's the first increase since the pandemic. We get more from Bloomberg's Amy Morris.
2022 provisional estimates from the Department of Health and Human Services show life expectancy at 77.5 years, an increase of 1.1 years from 2021, as fewer people died from COVID-19. But the CDC says that rebound regained less than half the years lost to the pandemic, so there is still more ground to recover to get back to pre-pandemic levels. In the 2 years following the onset of the pandemic, life expectancy had the biggest back-to-back decline in a century. Amy Morris, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Carol and Tim.
Hey, thanks so much for that update, Nancy Lyons. Really do appreciate it. Carol, a lot of stories on the most read that are attracting my interest right now. I kind of want to talk a little bit about the Dallas Mavericks sale.
Yeah.
We saw Las Vegas Sands stock fall as a result of that today.
Yeah, it's really fascinating. I'm kind of shocked that Mark Cuban was ready to let go of it.
Okay, he's not letting go completely. Okay,
yes.
He's still going to maintain a stake there. But
yeah,
it's really interesting. There's a great piece, like a really cool day 2 piece, although it's not even day 2 yet, but our team's already got a day 2 piece out. Chris Palmieri, Jillian Tan, Julie Fine, all write about how Mark Cuban's discussions to sell a majority stake in his Mavericks NBA team to Las Vegas Sands Corp Adelson family began with talks to build a casino and arena complex in Dallas.
Which is kind of interesting, right? To hear that happening. I mean, I'm just kind of I'm amazed. Talk to us a little bit about what that means. In terms of that part of it.
Okay,
that
so
aspect of it.
here's what it means. The management of Sands sees benefits in owning a team and a casino in the same city, since both involve large developments